Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I just wanted to give an update on the energy tsunami, which I talked about back in early December, suggesting that we were going to have a handoff from metals to energy. And um, and that's what's transpired. I also then did actually, the name of that update was Commodity Tsunami Still Coming. Here's how to profit. And then on January 31st, Energy and Commodity Tsunami is here. Again, that was before the war, that was before this big breakout, etc. The patterns nailed it. They were telling us what to do. Let me just show you a couple things here. Let's get into it. So I chose, instead of energy, or oil, crude oil or natural gas back in early December, um, actually back in August, when oil was at $65, I suggested the lows were in, and that was pretty much the low. But uh, crude oil was inside of this pattern, a very similar looking pattern. And I chose instead to use the iShares Commodity Index, which, as I explained on the call, is very energy heavy. It's 70% of the index is energy. And so I chose this over, say, DBC, which is a 50 or 40% energy commodity ETF and has more metals in that. But since metals were extended, I wanted this because of the big pattern, and the big pattern breakout. Gold and silver had already broke out a long time before that. People that listen to the channel here, they've had buy recommendations on gold, silver, platinum, uranium, copper, um, way before they got popular. And so anyway, I chose GSG because of the energy weighting, and it sat here and sat here, uh, and then it broke out, of the smaller triangle, but broke out of this big consolidation going back 4 years. And when it broke out, the price projection arrived at by measuring the base of that triangle and projecting upward was 31. And here's where I initiated, here's where I came out with the second tsunami uh, uh, video, saying that oil was ready to go. And um, we were already in this, and so I didn't initiate with crude oil. Also, it would be too redundant since this is 50 or 60% oil, and the other 10 or 15% is natural gas. So it's really skyrocketed, GSG. I don't think it's done. We're overbought, but not by a huge amount. So that was the vehicle that I used because the pattern was complete and it was broken out. And if I bought crude oil, I'd have to buy it down here, and that's not that wasn't as clear of a pattern as this was. So let's take a look at crude oil real quick. This is a long-term chart of crude oil. Here was the big bull run going into the 2008 high at $147 a barrel. And then we went into a bear market, and we had a bear market all the way to 2020, and we exploded off this low. That was during COVID, and off we went. And we broke out of the bearish channel. Actually, here we exceeded the resistance line, and then we traded downward in the formation of a bullish pennant, where these two converging trend lines are pointing downward, and it's counterintuitive because this is a bullish pattern, and you can see this week we're breaking out of it. So let's take a closer look at this. And here's the pattern. Here was December 5th when I did this the tsunami things suggesting on that call. I'll attach the video that the commodity tsunami is still coming, and I was bullish on energy, and that was pretty good. Um, and so here we are. We've broken out. Most people are going to chase this. We already have our energy component. And what I'm seeing here, so this should go a long way. This should go exceed this high. That's normally what happens with a bullish flag. So you're looking at 128 or so in crude oil eventually. We'll see. I know it's hard for people to get their arms around that, but it's certainly possible. One caveat in chasing this on this breakout is that you can see the confluence of moving averages now have all come together. And so we should have a retest of this, but this may have been the retest intraday today, intra-week this week. And I think most of this was uh, earlier in the week. Maybe this is the comeback, a type 2 convergence where prices come back to the convergence. We won't know that, but either way, you sell on up days and you buy on down days. And so, what was I doing today? I have some crude oil outside of GSG. I was selling. What would I do? Actually, bought some back into the close today as it faded from 77.5 to 75. But that's kind of the strategy. You want to buy on up days, you want to sell on down days. Seasonality takes a dip right here for crude oil. So we're the 3rd of March, and we should get if seasonality, again, this is just a tendency. It doesn't always, especially with the Iran war, that's not a normal time period, but the seasonality tendency is to have a dip right here. So we'll see if we get that. If we get that, we can load up and buy more crude oil. And I've been long energy stocks. I've been a long Chevron. And but look at the seasonality continues through June. So again, I wanted to point this out that I still think crude oil has a lot higher to go. I don't chase that though. I'm not going to buy it when it's up. So this is the GSG compo weightings. You can see energy 70%. I'm not sure what the breakdown is because I'm bullish on natural gas too, extremely bullish. And that's why I did the initiation of Antero Resources a few days ago, which is up, I think, 7% in 2 days, because it had broken out of its pattern similar to GSG did before crude oil did, just like before natural gas has now. So I thought it was a safer bet to do. And then you got agricultural. I'm still bullish on corn. I don't have a buy rating on it anymore because I was covering too many things. Copper, I think you're going to see some weakness in the metals, and it's going to present a good buying opportunity. But livestock, I really don't know anything about. And then you got some precious metals. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. I think the recommendations have been really solid. Have a great evening.